You guys ever wonder how some investors earn 8 to 12% returns without owning any rental properties, managing tenants, or doing any of the work themselves? I'm standing here at a fix and flip project right now that was funded by hard money loans. And those are perfect examples on how this strategy of hard money loans and making passive income can play out. In this video, we're going to break down what hard money is, how it works, and why more and more investors are using it to generate that passive income without having to originate the loans or do the hard work themselves. And make sure you stick around to the very end of this video because we've got a free gift for viewers that can help you quit your job and retire earlier than you think using passive income. Let's get going.
The real estate strategy that very few people are talking about, hard money lending.
Let's break down hard money. Let's talk about what it is, what it's not, and what you need to be careful for if you're going to be doing hard money loans. Hard money has a terrible name. It's actually not as difficult as the name makes it sound. It's actually easy if you know the ropes. Let's break down hard money, right? So when I buy a piece of real estate, I'm likely borrowing money. People that are newer to the real estate space think the only place you can get a loan is from a bank. I get that. It's not true. You can get a loan from anywhere. A loan is just someone that's going to be giving you money with the expectation of a monthly payment coming back to them at a likely fixed or maybe floating interest rate for a period of time. And that loan, 90% of the time, is secured by something called collateral. And Jacob, break down, what does collateral mean?
If you're making the hard money loan, you are acting like the bank. Now, a bank is going to need some assurances, Matt. They're going to know that if you don't do what you say you're going to do, or if you don't pay back this loan, then I'm going to need some assurances. So that is what collateral is. It is the assurance that the lender requires in order to make that loan. So if things go south, they have first rights to take over via that collateral.
Yeah, and the collateral could be like a lien on the property, and a lien means a piece of paper, a claim on the title of that property. It means that the lender, sometimes the bank, sometimes an individual, can come and take that property back through a foreclosure action. The lien allows me to come and take the property back from that person. The lien also says that if the borrower sells the property or refinances the property, the lien is there for anyone that looks at that property to say, hey, I have a claim against this property, so this person may not sell it or refinance it or take on additional debt without paying me off. That lien needs to get satisfied for someone else to go and put new money on the property or for someone else to take the property over. So that is what the best collateral you get as a lender. Equity perhaps gets access to the upside, property growth, all those things. Lender doesn't get that, but they get the security of knowing that their monthly payment's going to get made because the borrower would lose the property. So they don't want that to happen. Here's how hard money and how investors like us and perhaps like you can come into the game here in hard money loans. A bank is going to issue interest and a loan on a property at an interest rate based on other indicators in the market, based on the 5-year treasury, based on SOFR, based on prime rate, all those things. And in today's world, a bank will issue a loan in the 5-6% range, right? That's pretty good for a borrower. The problem is it takes a bank, what, Jacob, 60 days, sometimes 90. We at DeRosa Group have had to wait 120 days to close on a loan. But what if I got a screaming hot deal? What if I need to close in a couple of weeks? If you're an active real estate investor, you have been in those shoes where you've got a great deal, but the seller of that deal that you need to buy can't wait. They're not going to wait 90 days or 60 days for a bank to decide if they want to loan to you. That's where hard money comes in as an alternative to a bank loan. Yes, it's more expensive, but hard money can close faster and it can sometimes lend a lot on construction.
To make it more simple, banks are not going to finance a lot of things, right? If you are a fix and flipper that is trying to rehab a project and there's a lot of damage and you're doing a lot of work, a bank is not going to finance that loan. A bank has very strict criteria on the types of loans that it will finance. So for a lot of these real estate operators, fix and flippers, developers, what have you, they can't even get a bank loan. So hard money is actually their only option, their best option. So they are willing to pay a premium in terms of a higher interest rate for that. So let's bottom line this, Matt. What is hard money lending? Hard money lending is when a real estate operator needs alternative financing to a traditional bank. And they are willing to pay a higher interest rate to the hard money lender because they cannot get a bank loan. these are often very short-term loans as well, 6 to 12 months until they can get more traditional financing. So what is the benefit to you, the investor? The benefit to you, the investor, is you get more predictable passive income. So your interest rate in this case is going to be your return. Depending on whatever interest rate you're charging, that is the return on your money. You can get 8, 10, 11, 12%, sometimes a little bit more, and that is a very attractive return. It is more predictable cash flow than your typical real estate deal because it is interest payment and you're not dealing with maintenance and repairs and things like that, all of the challenges with owning a property. So that is predictable passive income. You also have, like Matt talked about, the security of the asset. You have the collateral. If the borrower can't pay you back, boom, you foreclose, you take over, that property is yours now. So you have security. So the one thing that I want to make sure that you're aware of is, yes, equity is good. Investing in apartment buildings or investing in your own rental properties is good, but that carries more risk, more reward. But hard money lending, you're taking considerably less risk. So yes, there's less upside, but you're taking far less downside as well. And so when you marry those two investments, some equity investments and some risk-adjusted return metrics or investments like hard money loans, then you're starting to build a portfolio that kind of covers you on all bases. So that is why hard money lending is an attractive investment vehicle and why not a lot of people are talking about it. Because if we're trying to get passive income, Matt, this is probably one of the most reliable ways to generate that passive income.
That's right.
And you're not taking as much risk. So this is why we really love the hard money lending strategy as a complement to other real estate investing strategies, right? And Matt, now let's head back. Let's actually take the viewer on a real world example. So let's go back to you in the field, Matt, on how actually this plays out in a real hard money lending on a real actual deal.
Let's get in the field, guys. Come on.
Okay, guys, this is a fix and flip that me and my wife are working on now. This is in New Hope, Pennsylvania, where we live. And I'll talk you guys through the whole thing, and I'll talk you guys through why hard money is an amazing vehicle for a fix and flipper like me using it on a project like this, okay? So this property we bought for $1.9 million. It's a lot of money. And the reason why we paid that kind of money is because of that. That is the Delaware River, and for some reason or another, people are willing to pay a lot of money to wake up looking at that every day. Not just the Delaware River, but that is water. People pay a lot of money for waterfront anything. There's a boat dock over there. It's walking distance to a gorgeous downtown, a gorgeous thriving downtown. And it's an area that does well and that people want to live on the water and in the town of. So 1.9 was the purchase price of the property. Now, it's very dated inside. It is very dilapidated and it needs to get a major gut renovation. The renovation plan is to take it down to the existing foundation, reuse some of the structure, but also put new structure up and build 2 more stories on top of this house. Lots of glass, lots of common area. It's gonna be a great house for people to live and thrive in and look at that river every day, every morning. They can sip their coffee or sip their whatever, looking at that river every morning if they'd like to. Renovation cost for a new structure on this land is gonna be $1.4 million, all in. So 1.9 million buy, 1.4 million construction. That's 3.3 million in construction cost plus around 200,000 in carry. That means in interest and also other soft costs like architects and engineers and all the jazz that it takes to get this kind of work done. All that takes the project cost to be around $3.5 million. This house will sell for around 4.5 when it's done, based on many, many comps that we've seen, if not maybe a little bit more, because it is exclusive. It's an exclusive area. It's got that, which is very hard to get to around here. And it's got many, many other amenities that make houses in this specific area worth very much, okay? The reason why we love hard money for this specific project is because we're buying for this and we're putting in almost our whole purchase price back into the project and construction. Perhaps we could have gone to a bank, but it would have taken them a long time to close to get the deal that we did. We had to close very quickly. And we also needed a lot of construction dollars. And a hard money lender that lent to us on this deal was very willing to work with us on that. They came in with $1.6 million on the purchase price and then lended all of construction. No way a bank's doing that, and no way a bank's closing that quickly either to take advantage of great deals. So there are people out there, flippers like me, that are in your local area that are doing big renovation projects like this, creating tremendous value, and for one reason or another, a bank's not going to touch it. And that's what makes hard money phenomenal, is a hard money lender can step in and get the same terms that a bank can with collateral, monthly payments required, all the things that a bank gets, but at a much higher interest rate and a lot of the same risk mitigations that a bank would get to.
All right, guys, back in the studio now. So now let's break things down a little bit further and talk about some of the risk factors that hard money can present and how we at DeRosa have an alternative that you can consider around that. When you think about an investment, the rate of return you make on that investment is somewhat correlated to the perceived, underscore that word, perceived risk associated with the investment you are making. You could certainly go and put money on the roulette wheel in Las Vegas and you're going to make 50% return on your money if your number hits. But there's a high risk, of course, and there's a high perceived risk with that. And that's why they have to pay big when you win in Las Vegas. Obviously, we're not talking about Las Vegas and real estate investing. Hard money is arguably risky because you're investing in properties like the ones that I just showed you guys, or ones that are not quite at their highest and best use yet. So that's why the rate of return is higher. And that's why you're doing a deal that a bank wouldn't do. Let's put it that way. So that's obviously a higher risk factor there too. But what's great about hard money loans is if you structure the right loan, if you use the right documents, and if you find the right borrower, all those equations boxes check, you can have a phenomenal loan with good collateral. I have friends that have gone and found people and they've originated hard money loans directly. I'll give 50K to this guy and I met him at a networking event. Seems like a good guy. Seems he's got a great project. I lent him 50,000, 100,000, 200,000 out of my retirement account and I put it into his deal. And I've heard horror stories, Jacob, of people that ended up lending money to the wrong person, not the right vetted deal. Maybe they put a higher loan to value out there. Maybe they didn't use the right loan documents. Maybe the person they lent to just got over their skis, so to speak, they weren't able to pay the loan back in one form or fashion or another. These things do happen. And so there is a risk factor associated with hard money loans.
Matt walked you through a real life deal, right? That's using hard money lending, and it really created a win-win scenario for both the flipper and for the lender. And that's what hard money lending is about, is creating that win-win. The thing that's tricky though, is if you're sitting there watching this, you're saying, I don't know any real estate operators to invest in. I don't actually know how to underwrite loans. There is a lot of risk in terms of loaning out your money to the wrong people, because that can be a doomsday scenario. Even if you have collateral, maybe you don't want to foreclose on the property. So what do you do if you do not know how to make the hard money loans, or where to go, or who to loan the money to? What are the legal docs required, Matt, secure or put a lien on that property? It opens up all these questions for you, the investor. You say, hey, I want that passive income. Hey, this sounds like a good strategy, but how do I actually capitalize on it? So that's where we want to talk about the alternative to making the hard money loans yourself. So if you want to get into hard money lending, but you're not exactly sure how to do that, and you want to mitigate a lot of the risk factors that Matt and I had talked about, then you might want to think about investing in a hard money loan fund like what we have at the DeRosa Group, the DeRosa Income Fund. So what is the DeRosa Income Fund? We take money from investors, right? It's actually a $10 million fund at the time of this recording. We take that money and we go and make the hard money loans. DeRosa has the ability to source hard money loans. We have an influx of people that are asking us to loan money. We also have the know-how to underwrite these deals, to pick the absolute best, the lowest risk hard money loans. So we are underwriting those deals. So we have the deal flow, we underwrite those deals, we make those loans on behalf of the investors. We charge the real estate operators an interest, and we pay the passive investors that interest income. And DeRosa obviously shares in the profits. It's a true win-win for DeRosa and for the investors. And so you, the investor, you get all the benefits of hard money without having to find the deal, operate the deal. It is completely passive for you. We pay anywhere from 8 to 10% returns. On average, right now, it's 9.5% paid on a monthly basis. You also have the ability to reinvest the proceeds back into the fund. So it's incredibly flexible and it's liquid after 12 months. It is really a high yield savings account on steroids, in my opinion, backed by real estate, backed by the collateral of all these projects. and you have an operator like us at the DeRosa Group that is managing that fund for you. And so that is an alternative to getting the benefits of hard money lending without having to do the hard money loans yourself. I view it as the easy button for hard money lending.
There you go. Yeah, you said it. This is making hard money loans easy. This is taking the operational expertise that DeRosa has. I should mention that the DeRosa Income Fund has a lawyer as a partner in the DeRosa Income Fund. And so you're not going to be able to do that if you go and issue a 50K, 100K loan to somebody that you met at a RIA club or something like that. You might make great return on your money doing that, but you're not diversified. And you don't have the team and the scope and the breadth that we're able to put out there because we've got north of $10 million at work. So for all those reasons, guys, whether you decide to issue hard money loans yourself and make great returns on your money, or join a fund such as the DeRosa Income Fund, we think that hard money loans are something that should absolutely be a part of your portfolio. It's a part of my personal portfolio. And it's something that we believe all people should have in there for good collateralized day one income for themselves to make on the real estate investments, while they also invest in other things that have tax losses and upside and things like that, like equity investments do. But you can't invest in just equity. Debt investments like the DeRosa Income Fund are ones that are going to provide that cash flow to you and also liquidity that you need to have as a part of your portfolio.
Absolutely. And so if you want more info on the DeRosa Income Fund, and it's a 506c for accredited investors only, but if you want more info on the DeRosa Income Fund, you can check that out in the link in the description below. And Matt, at the beginning of the video, we promised a gift for people that stayed to watch till the end of the video. So let's talk about that now. If investing passively and generating that passive income is a strategy that fits into your bigger vision, especially if you're working towards financial freedom and wanting to quit your 9-to-5 job, we have built the perfect gift for you. We put together a free on-demand course that walks you through core passive investing strategies that is going to help you leave your job early, right? I repeat that again, help you leave your job early. If you want to quit your 9-to-5 and you want to do so before traditional retirement age, we put together a free training for you that you can get absolutely free down in the link in the description below. So make sure you check that out. You won't regret it.
I've had multiple investors that have been investing with the DeRosa Group over the years retire early. I had one guy do it at 38 years old. You don't have to retire at 65 or even 50 if you make the right decisions and create passive income for yourself. This is something I've seen people do over and over, and the methods that they did it are all in this free training that Jacob and I created on how to quit your 9-to-5 job early so you can go do what you love. You don't have to sip Mai Tais on the beach. If you want to, you can, but you could also go and do things you love instead of a job that you maybe don't love so much. Life's short. Why not do what you enjoy doing and make some passive investments that can pay you without you having to put in the time, the effort, and put your time into things you enjoy doing versus time into earning money because your money's earning for itself.
So let's land the plane on the video today. We hope you found this video helpful. So let's recap. Hard money lending is an overlooked but powerful strategy for passive income. You can make the hard money loans yourself, but there are some risks there, or you can do it passively through vehicles like the DeRosa Income Fund. We also put together, like Matt said, a free training on how to quit your 9-to-5 job. You can get that for free down in the link in the description below. If you found this video helpful, make sure to like, comment, and subscribe. We are trying to get the DeRosa Group to 100,000 subscribers, so we would very much appreciate the subscription there. Make sure you subscribe because Matt is going to be doing a very cool video next on how to raise $1 million for your next real estate deal. So if you do not want to miss that video, make sure to subscribe.
DeRosa Group's raised $70 million, actually more than that. We're going to be teaching you guys how to do that, how to raise your first million or at least your second, third, 10th million or whatever it is for your business using the technology that DeRosa Group's done. We're going to teach you for free on this YouTube channel how to do it. But the only way you're going to get notice that that video's out there is by subscribing to this channel. So click that subscribe button wherever it's here on the screen. Grab that so you guys can get notice of that video on how to raise $1 million or more for your business in 90 days or less. As Jacob said, we've been posting YouTube videos for over 10 years now. Help us hit that 100,000 subscriber mark. Jacob and I want that really cool plaque. So if you like what we do, like this video, click the subscribe button so you can help us get there. Thanks for watching this video with Jacob and I. If you liked what we had to say, here's a few other videos that YouTube thinks you might check out, and we'll see you guys soon.